What is up, Steve here? I hope you are doing well. I had to get this out. I really wasn't even expecting to go live today, but I needed to get this out as quickly as possible for you guys. So Redfin just came out with their report in terms of Americans canceling deals to buy homes at the highest rate since the pandemic has started. So before we get into the rest of the article, I mean, we got to talk about this. This is huge. They're canceling at the highest rate since the start of the pandemic. Now, if we can go back to the start of the pandemic and just think about it for a second, like the world was ending almost at that point in time. I mean, there was so much fear and people were freaking out, and the amount of uncertainty and everything else. So when the pandemic first started, people were just fearful. And yeah, of course, they were backing out of contracts left and right. And now at this point in time, according to Redfin, the cancellation rates are higher than the start of the pandemic. I mean, drop a comment if you guys think that is insane. And also, thank you guys very much for always supporting this channel. If it weren't for you, this channel would not exist. So I really, really appreciate you guys. All right, so, and I dropped the link for you guys in the description so you guys can read up on it as well. And let's jump into it. The share of sales agreements on existing homes canceled in June was just under 15% of all homes that went under contract, according to a new report from Redfin. That is the highest share since early 2020 when home buying paused immediately. Cancellations at that time Cancellations were about 11% 1 year ago. So this is big. I mean, that's a lot of people canceling out. So they're saying 15% of all homes that went under contract were canceled in June. Now, I remember clearly when the pandemic, when it first started, there was actually a lot of cancellations. And as real estate brokers, real estate agents, we were the essential workers or whatever the case is. So we were still able to get out and about, still able to service clients in real estate. And, it's just like it was bad back then. We all know how bad it was, in the beginning stages of the pandemic. And, we had a lot of cancellations, and now for this report to come out and saying that it's higher than that point in time, it's just astonishing. Higher mortgage rates and surging inflation are causing many potential home buyers to reconsider their purchases. Obviously, the average rate on a 30-year fixed mortgage started this year around 3% and began rising steadily. It shot above 6% in mid-June before settling in a narrow range of around 5.75%, according to Mortgage News Daily. And let's see what the rates are right now. Mortgage News Daily, by the way, it's an app on my phone that I utilize because it's pretty good, but it takes into account any kind of loan origination fees and kind of averages it out for you guys. But right now it's showing 5.77% on a 30-year fix. But that's huge in terms of what it was in the beginning of the year. All right. Higher mortgage rates have also caused some home buyers to no longer qualify for loans that they want. Tonight, if you guys tune in, I'm going to have the monthly, the housing market indicators, the monthly update that I go through with you guys each month. And we're going to talk about that. But remember, this is all lagging information on this report too. So that's going to launch tonight at 6 o'clock if you guys want to join on that. Buyers are also seeing the once red-hot market turn around quickly and dramatically. They may no longer see the urgency in bidding for a home that they feel might depreciate in the coming year. I think that's extremely important in terms of buyer sentiment. People are understanding that and realizing that, if I buy right now, what are the chances that the value of that same property is going to go down 12 months from now, 24 months, 36 months, and so forth. And people are seeing that. They're fearful that they might be overpaying for a property, locked in at a higher mortgage rate as well. And if something happens and they have to get out of the property and they have to sell the property, they're going to be upside down. It's called being underwater, and it's unfortunate. And, the only other option really is to sell it for a loss, cut a check at closing for the deficient amount and any closing costs associated with it, or they can rent it out. Or if they can't do either or, then they might be susceptible to a foreclosure or even a short sale. And short sales, I think we're going to start seeing, not right away. We're not going to see a whole lot of foreclosures right away. In my estimation, it takes a while to process these through. But I think in the next 12 to 24 months is going to be very, very telling in terms of where we're at with inventory. And I think inventory is going to skyrocket. Chris, what's up, Chris? Good to see you too, man. Thanks for being here. We have waterfront homes on canals, many retirees. Yep, for sure. Palm Coast, right on, man. The slowdown in the housing market competition is giving home buyers room to negotiate, which is one reason more they are backing out of deals, said Taylor Moore, REDFIN's deputy chief economist. Buyers are increasingly keeping rather than waiving inspection and appraisal contingency. That gives them flexibility to call the deal off if issues arise during the home buyer process. I think the people that are – so most recently we had a deal in Bonita Beach, and it was our listing, and the buyer backed out, and the buyer's agent really wasn't too informative on why they're backing out. And with the Florida as-is contract, you can basically back out for any reason during that inspection period, and you technically don't even need a reason to back out. So, I think that there is a lot of uncertainty, and people are just looking at what's going on in the market, and they're like, you know what, this might not make sense anymore. And then most recently in the community that we still live in Bonita Beach Club, a unit, 2-2 unit in here. It was priced, I thought, fairly decent for the market in like the low sevens. That went into contract. And I think like a week and a half later, it came back on market. Not sure what happened there, but and I'm on a lot of drip emails for a lot of different communities and communities that I have interest in investing in. And I'm just watching the market. And even today, ton of back on market, ton of price reductions as well. So if you guys are in the market to buy, if you could be a little bit more patient as well. It's the same thing with us. We just locked into a short-term 6-month lease in another complex as well called Pelican Bay. And we're just going to wait the market out and see what happens. But this is astonishing news, guys. This is big information. Home builders, they're also seeing a higher cancellation rates even before the sharpest increase in rates in June. Cancellations in May jumped 9.3% for new home builder cancellations. I think we're going to see that skyrocket even higher. And also, it's funny, like before when the market was hot, home builders, they didn't really care if a lot of them didn't even want outside real estate agents in the picture because it cut into the profit because they would have to pay commissions. Now I'm getting inundated with emails from home buyers and their sales reps in terms of no bidding any longer. And here's your choice of all these properties for sale. And it's funny how the tables have turned. By the way, I've been in real estate since 2003, a broker owner of our real estate firm since 2006. And I can tell you in the last real estate recession, I feel like it didn't happen as quick as things are happening right now. And again, real estate, the data is usually lagging in nature. But I have not, maybe I just forget, but I don't remember things happening so fast and so drastic and so dramatically. To say that we're not in a bubble, I think is, I don't know. I think every asset class, including a debt bubble, we are in right now. Buyers' remorse and cancellations shortly after contract are increasing. Builders state buyers are nervous about a potential recession, struggling to get comfortable with higher payments, or expecting home prices to decline. So not only are we seeing the same kind of feedback and buyer sentiment from resale properties, but we're seeing it with new construction home builders. And it's across the board, guys. We're seeing it. And, on this channel, I've been kind of calling for this for a while, and I knew it was coming. It was just a matter of time. And it was just a matter of time before the Fed stopped buying mortgage-backed securities and they started increasing the Fed rate. That was going to kind of cause us to get into this real estate turmoil that we're headed into. Lennar, one of the nation's largest home builders, said in its most recent quarterly earnings report that its cancellation rate did increase sequentially to 11.8%, but was below its long-term historical average. I mean, way to cover it up there. I'm curious as to what next month will be. It also reported increasing its incentives to make up for falling demand due to rising interest rates. Please go back to some of the home builder, and I'll try to link them below. Go back to some of the new construction home builder videos I did. I called this maybe 3 to 6 months ago in multiple videos, and I said that these home builders are going to be reaching out and they're going to start providing incentives like crazy. They're going to provide, right now, I guarantee something big. If you go into any of these sales centers, a lot of them have their own in-house mortgage or lender. And I guarantee, because people are not necessarily going to be able to qualify, they're going to buy down that rate. So they're going to buy down that rate to get your loan to value, to get your debt service coverage ratio, to get all those numbers in order. And they're going to buy down those rates. They're also going to provide additional incentives like upgrades, maybe lot premiums. So if you guys are in the market to buy, which again, if you wait it out longer, in my opinion, I'm not a financial advisor in any sense, but I think that we're going to see even better deals. But if you guys have to buy right now and you're buying new construction, just dig your heels in. Don't be afraid to walk away and ask for everything on the table. I'm talking, upgrades to the property. I'm talking covering all closing costs. I'm talking rate buy downs. I mean, there's a lot that you guys can do. Now, by the way, pre-pandemic, one community in specific in the Estero area, we brought a client to. And even then, prior to the pandemic, they had incentives. We got a lot premium at a cheaper rate, I believe, and we got closing costs covered and a certain amount of money toward upgrades. And this is before the pandemic. So I've mentioned in other videos that our real estate market was just kind of trickling along. We were going up, but it wasn't healthy. It was just trickling along. And, coming into the pandemic, obviously we all know what the Fed has done to our real estate market and our economy altogether in terms of the amount of capital infusion and artificially low interest and just cheap money that just inflated the heck out of everything, unfortunately. It seems that these trends will harden as the Fed continues to tighten until inflation subsides. While we can choose to fight against the trend, the reality is that the market has been changing. We're getting ahead of it by making all necessary adjustments, said Lennar chairman Stuart Miller in a release. And watch out for these smaller home builders too. I think that we're going to see a lot of the smaller home builders go under, or they're going to be stuck if they weren't propped up financially in the right manner and they were maybe using their own money or their own debt to build houses for other people. And also, I think some people that are getting construction to perm loans might be in trouble if they stop paying on those construction to perm loans. Then the builder is not going to get the necessary draw from the banking institution to finish the product. So I bet in a lot of areas we're going to see houses sit out there that are unfinished. And if you guys are seeing houses in your area that are unfinished, please comment below. Let us know maybe generally where the area is. And a lot of times the things that you guys can look for that is overgrown grass. A lot of times you'll see, I saw it yesterday actually on a house, you'll see roof trusses sitting out in the front yard and they are just caked. They're all molded out. They have mildew. The roof trusses are literally black in some cases. You'll see roof trusses warped as well. You can always check the permit boxes and see when permits were pulled. I looked at another property here on Bonita Beach. Permit was pulled per the permit box several months back. I think it was like 5 or 6 months back, and it's starting to overgrown grass. They already cleared the lot, so who knows what's happening with that build, but new construction is definitely slowing down. Understand something too. The Fed bought, I think it's right around 2.8 trillion worth of mortgage-backed securities. They no longer are buying mortgage-backed securities, and they're doing a roll-off. So they're allowing, as people refi or people sell their properties, they're not buying any more mortgage-backed securities. And I think they were buying like basically 25% of all mortgage-backed securities. And now other investors like pension funds and everything else, they need a higher return than what the Fed was getting. The Fed doesn't care about their return on investment because they just make money out of nothing. But real investors, real pension funds, hedge funds, and everything else, they need a return on the mortgage-backed securities. So I anticipate we're going to see rates continue to go up because, if they don't, then there's not going to be any more buyers of mortgage-backed securities, which there's going to be a lot less originations of loan originations going out there. And I said this in other videos as well, things to prepare. And one of those things to prepare for is make sure, because I'm anticipating the market to go further down in value. And when it does, I want to buy more and more real estate, and I will take on debt. So I want to make sure I'm stacking up as much money. I want to make sure my credit is in primo condition, because underwriting standards are likely going to get more difficult. And it's important to prepare ourselves, if you guys are investing in real estate, to stack as much money as possible and make sure your credit is good. And also get rid of any stupid debt. Anything that you guys are financing right now is only going to hurt your chances of getting financing. So, if you have car debt, if you have credit card debt, if you're financing anything that's not putting money in your pockets, just taking money out of your pocket, try to get out of any kind of debt like that, because it's only going to work against you when you guys are getting financing for a loan, for, investment property, or even your first home. Any of that's only going to hurt your chances of getting some investment properties. Anyway, 1717, let's jump into some comments here. If you guys want, if you have any questions, comments, or what you guys think about this freaking breaking news article on people just backing out of contracts. Again, 15% of all homes in June that went into contract backed out. Astonishing. What do you guys think about this? DC, what's up, brother? Gabe, what's going on, man? Please leave the live recording for a day or two. Got to work right now, but I'd like to watch it later. Cool. Appreciate you being here. Wan Chong. Brian B. just had roofing material delivered to my home today in Flagler Beach. Talked to the roofing company. Said there are slammed with deliveries. No slowdown here. I mean, real estate is, I always say, it's microeconomics. Like even this community, Bonita Beach, we still have a huge lack of inventory here. So I could probably foresee Bonita Beach increasing in value, even though, we just listed a condo here in our community, and, I thought we listed it fairly decent, and we're getting activity, but no, well, we had one offer, but anyway, my point is some areas will still see an increase in valuations as well. The craziness can't go on. Pat Magic, it all needs to reset. I mean, again, like if you look at the debt bubble, just Google the United States debt bubble, and you're going to see consumer debt or the government debt. It's the highest by I think 5 times that it's ever been. It's huge. And then obviously every other asset out there has bubbled out. Real estate, I think, is the last to fall. But I think when real estate starts to fall, we're going to see a lot of more economic hurt in the market. Garage 360, thanks for the live stream. Thank you guys for being here. You're close to Panama City Beach. We drove on it like a year ago. It's pretty cool. Hope the market goes down. We have lots of cleared lots, but little is happening. Not sure if a slowdown is happening, Chris. Anon, thank you, Joe Brandon, for everything you've given us. Best resident ever. We still see lots of California migrating here in Arizona market. is still fairly high, but has leveled a bit. Yeah, again, it just depends on migration patterns as to what's going on in your local real estate market. We're going to see some more. I mean, we're going to see some markets completely crash and burn pretty quickly in certain areas like Boise, Idaho, where you had a mass influx of people, and now people are dropping out. Miami, there's a lot of stuff going on in Miami in terms of crypto and other tech companies going there. And I think the Miami market may hold strong because there's a lot of other successful businesses that are not propped up by a whole lot of debt going there. And I think I want to touch on this for a second too, is I think it's something like 40% of companies on the publicly traded companies are basically non-profit. They're not making money, and they were relying on venture capitalists. They were relying on cheap debt to stay afloat and grow their valuations of these companies. And to me, it's just like, if you're not profitable and you're just taking money to grow and you're taking debt to grow, then what do you really have when all the music stops? So I think, again, I've been saying this, I think we're going to see mass layoffs, even though the jobs report that came out is showing that, it's looking pretty good. I think that's going to reverse, and it's probably going to reverse pretty quickly once a lot of these companies surface by showing that they're insolvent. And basically, if you're insolvent, you have nothing. You have no money. You don't have enough money to cover your overhead, your debt, your employees, and everything else. Again, today at 6 o'clock, the housing market indicator from the U.S. Department of Housing and Urban Development. This is free to you guys, by the way. And tonight at 6, I'm going to go through this. It's very powerful information. And I'm going to leave the link for you guys there as well. Anyway, I appreciate all you guys being on this channel. It means a lot to me. If it weren't for you guys, I would not have this channel. And it's exciting to see it grow too. And obviously I want to see your comments too. If there's anything that you guys want me to touch on pertaining to housing or the housing market, let me know. And I'm planning on bringing you guys through some houses that we're going to start looking at and buying and everything else. It's going to be a lot of exciting times ahead of us. And for those who are prepared, and I know you are prepared, there's no doubt in my mind, if you're on this channel and you're watching, I know you are preparing. And that's what this is all about, is just, I think I had one person comment saying that, I'm fear mongering or whatever. I'm like, no, dude, I'm trying to get people prepared. Like this could be a huge opportunity to grow your wealth substantially if you are prepared in the downturn. And not even just housing, it could be stocks and everything else. And also buying businesses. There's going to be businesses that are going out of business. And if you have any kind of creative sense, you could probably buy some of these businesses with no money. I mean, there's going to be so much opportunity out there that, again, if you're prepared, but financially, people get into such financial ruins that they don't have the opportunity to do anything because they're worried about their own finances. And it's because a lot of people, not you, but a lot of people, unfortunately, put themselves in financially bad situations. So get out of debt, get out of consumer debt, minimize your personal expenses, increase the amount, get a side hustle, increase as much money as possible, put on the side, and work on your credit, blow that credit up. I will see you guys tonight on that video at 6 o'clock, housing market indicators. Thanks for being here, guys. Appreciate you.